Ladies and gentlemen, good day and welcome to the Q1 FY23 unaudited results conference call of TCI Express Limited, hosted by ICICI Securities. We have with us from the management Mr. Chandar Agarwal, Managing Director, Mr. Mukti Lal, CFO, Mr. Pavitra Mohan Panda, COO. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Chandar Agarwal, Managing Director, TCI Express Limited. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and welcome to the Q1 Financial 23 earnings call of TCI Express Limited. I would like to thank all of you for joining us here today. I will first start with industry and business overview for the quarter, and then we'll hand over the call to our CFO, Mr. Mukti, to discuss the financial performance of the company for the quarter. Our earnings presentation has been uploaded on the website and stock exchange, and I hope you had a chance to review it. The first quarter of financial year 2023 was backed by strong demand driven by key industrial sectors. The growth in industrial activity was visible in all the months, and e-way bill generation for June ended on a strong note, reaching 7.5 crore, which indicates a brisk pace of economic growth. However, higher crude prices, rise in commodity prices, overall inflation continues to add the pressure. Amidst the landscape, TCI Express continued to deliver yet another quarter of solid performance. The company has delivered quarterly income of 292 crores, registering a strong growth of 30% year-on-year basis. The growth was primarily driven by increase in economic activity and rise in industrial production, which both were subdued in the comparative quarter because of the second wave of COVID-19. EBITDA for the quarter stood at 45 crores, registering a year-on-year growth of 33% with a strong margin of 15.3%. The margins were slightly lower compared to the previous quarter due to an increase in employee cost as the team is being built for the new launch services. The margins are expected to improve definitely in the subsequent quarters with the pickup in utilization levels and increase in overall operation efficiencies. Our profit after tax stood at 31 crores, a growth of 30.5% year-on-year with a margin of 10.6% compared to 24 crores in Q1 Financial 22. Now, coming to a brief update on the developments during the quarter. We have added 10 new branches in the West and North region, and we expect to add around another 50 branches during the full fiscal year to strengthen our presence by expanding our services deeper into the key growing markets and to cater to the growing demands of SMEs. In line with our target to add and increase the size of our sorting centers, we have incurred a capex of 33 crores, primarily towards the land purchase in Calcutta for setting up the automated sorting center. The recently launched Gurgaon sorting center is now operational 24/7, and we expect it to contribute meaningfully by reducing the turnaround time and enhancing the operational efficiency in the long run, and ultimately reducing direct cost. In June 22, around 18% of total tonnage has been processed from Gurgaon center, which reflects the scale and capabilities of the center. Amongst our newly launched services, we are seeing a strong demand for rail express service from our customers. In a very short span of 1 year, we have strengthened our customer base from 250 to 1,000 and expanded our presence from 10 routes to 60 routes. Our dedicated team intend to make significant progress during the year, and meaningful contribution is expected in full fiscal. Now, to give you an update on recently announced buyback. Last quarter, the board has approved buyback amounting to 75 crores through an open offer route at an indicative price of rupees 2,050 per share. It was placed before the shareholders in the AGM today and the shareholder voting results will be out in the next couple of days, subsequent to which the offer will open for participation. Looking ahead, demand for key industry segments such as textiles, FMCG, automobile, chemicals, pharmaceuticals, and industrial goods, coupled with various government infrastructural development initiatives, are expected to bode well for the industry. I remain confident of delivering strong quarter-on-quarter growth in the line of upcoming festive season and the remaining on track to deliver the annual growth of 18 to 20%. With this, I would now like to hand over the call to Mr. Mukti to discuss financial performance of the quarter.
Yeah, thanks, Chandra sir. And now I would like to discuss the quarterly performance of the company. In Q1 FY23, our total income stood at rupees 292 crores as compared to of 225 in the same period of last year, registering a robust growth of 30% on year-on-year basis. This growth was driven by growth in demand from both corporates and SME, which contributes equally around 50% each to the revenue in this quarter. Our EBITDA also increased by 33% into rupees 45 crore as compared to rupees 34 crore in the same period of last year. EBITDA margins were 15.3%, flat compared to same last year, lower compared to previous quarter. We continue to maintain high EBITDA margin despite increase in employee costs due to expansion in workforce. The net profit of the company increased by 31% to rupees 31 crore with the margin of 10.6%. During the quarter, we have incurred a capex of rupees 33 crores towards the purchase of land, especially purchase of land in Kolkata for setting up automotive sorting center there. So thank you very much, and now I would like to open the floor for question and answer. Over to you, moderator, please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you for taking my question, sir. Sir, I had a question on the gross margin. So we've seen that gross margin has declined sequentially. So if you could just throw some light on that.
Yeah. So basically, so if you see gross margin, if you compare with the Q4 to Q1, it is always slightly lower because in this industry, Q1 is the always weakest one, and then it is strengthening, and Q2 is better, and then Q3 is more than better to that. So if you see the last year trend or if on 5-year trend, the same trend we have, and this will be subsequently again increase in Q2 and Q3.
So even if I look at it, sir, on a YOY basis, there's sort of a 100 basis point sort of a decline. So
yeah, that is actually mainly happened because in this quarter we have some business growth from west region is more and slightly less growth from the other regions of like east and south. So basically some increase on some empathy on those routes. So that's why this utilization level of this quarter has been around in 84.5%.
Okay. And just adding on to that, on
it's just temporary. It is not a major change or something that has happened. It's just a temporary phenomena.
Okay. And sir, the second question was if you could just give data with respect to tonnage, and you mentioned the utilization. So if you could just give the data with tonnage.
Yeah. So tonnage we have carried this quarter is 230,000 tons, and this is growing almost 28% over last year same period on year-on-year basis.
Okay, sir. Thank you so much for that. That's all.
Yeah.
Thank you. The next question is from the line of Dipesh from Equirus Securities. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. So the tonnage data that you just gave, just wanted to be clear that that is inclusive of all the new services also, right? The rail and everything that you started?
Yes, that is there.
Okay. So just a question on this, that if you look at, like, go back in the years, right, and if you look at the second quarter FY20 or third quarter FY20, you are the same tonnage level. So the tonnage is actually not growing. So when and how do you think that the tonnage will be able to break through this barrier of 2.3, 2.4 per quarter that we are doing?
So you compare with the quarter of Q2 or Q3 or so?
FY20. So obviously the base was weak, but if you look at the previous year quarters, we have been like fixed at this kind of tonnage number for a quarter, right? So how and when we'll be able to break through this tonnage number that we are doing right now?
Yes, so trade is increasing, so like you compare with the 20, that was also not the great year for us. And now this is quarter on quarter basis is increasing.
Okay. So anyway, also if you look at the quarter on quarter, there has been a 22% decline. So just want to understand if there is any market share loss or any loss of customer that you want to highlight?
No, this is not the case. As I mentioned, this is Q1 is always the lowest revenue we have, or this industry has the same pattern. And then on a year on, each quarter it will be improved. So that is the only same thing is happening. And, we have grown almost 30% over last year, same period. So this way it is not on a big task. You see the same, last year figure is also same. If you see the last 5 to 7 year period, the same thing is happening.
Just to add to this, if you see Q1 higher than Q4, it means that the price cut has been taken, and that is not in our case. So we have not done any price cuts for greater top line. So this is typically the case in logistics industry, where Q1, if it is higher, that means the profitability has been compromised.
Got it, sir. So lastly, on the rental cost, if I look at the rental cost in FY22, that was around 32 crores versus 30 crore in FY21. While the understanding was that when you basically do capex for your own sorting centers, the rental cost should have ideally come down. So just wanted to be clear that if that benefit has still to come, and how much will be the benefit?
No, so basically, if you see, that is the one aspect that Pune we started in June, and that benefit for the whole year will be coming this year. Second aspect, because we also shifted that benefit will also be coming this year. And other thing is because to grow the company, we always adding the capacity in these sorting centers and branches. We opened 50, 60 branches in last year. So we have taken the space, and that is also, adding in this expenditure. And other aspect of that, because now this economy has opened up and slightly rent has also increased because inflation is, there. So that has also slightly has increased, I think it's 2-3% impact of that is also there in this rent component over FY21 to 22.
Got it, sir. Can you just quantify what is the Pune and the Gurgaon rental cost that will go off this year?
So we can't be give exact number on.
Got it, sir. Got it. I'll come back in the queue. Thank you.
We will be share on one-to-one basis, and you will be on that.
Sure, sir. Sure. Thank you.
Thank you. The next question is from the line of Dev from Spark Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Yeah, hi, sir. So just wanted just a doubt on the margin front. So when will margins recover? I know you mentioned that 1Q is usually a weak quarter, but when will the benefits kick in from the new sorting centers in Pune and Concall, and how will that help margins, sir? That's it. Thank you.
Yeah, so basically in Q2 onward, we will be again come back on the same territory of 17 plus kind of margin level, because now is again revenue is increasing very fast, and pattern of these also sometimes depends. So that will be happen. If you see the same kind of thing of last year pattern, same pattern has been happening in Q2 onwards. We have started to improve the margin level, and that will be sure it will be again come back to on the 17% plus.
Okay, sir. Thank you. Thank you. That's it from my side.
Thank you. The next question is from the line of Preet from Wealth Finvisor. Please go ahead.
Yeah, hi. First is I wanted to understand if you can share any insight into the Gurgaon automation and if that has been fully running and are all the teething issues over?
Chandra sir, you would like to answer on that, please?
So it is running in full force, and I think in the history of Indian logistics, we have seen that first time that the labor utilization has reduced in such a large facility, and the time it has taken for trucks to turn around has reduced from 1.5 days to now we're talking only 12 hours. So I think, and from September or October onwards, it's going to be 8 hours. So I think this is a very big game changer for the industry. And as we go along and we also start putting the same in other cities, is where we will see a combined effort of better utilization, faster customer connect, and customer satisfaction to a greater level.
And are there plans to apply that to Pune this year, or will that be next year?
So Pune, we will start. We have done all the R&D for Gurgaon, so it is ready with us. And September onwards, we will start the process for Pune, and that we should be able to put it up by next year Q2.
Okay. The other thing I wanted to understand is that are you seeing any slowdown on the ground for, say, the month of July, given that the lot of industries, say especially chemicals, textiles, are seeing a certain level of slowdown? So is there anything that you guys are seeing on the ground, and what would your guidance be for this month, for this quarter, Q2?
I don't think that we are seeing any slowdown in our sectors that we are in, because we don't really deal with chemicals in a large way or any of the verticals in a large way. And I think whatever guidance we have given for Q2 is intact. I don't see any change in that. So, of course, one has to be very mindful that we all are in a very precarious situation where the war is still looming, and all of that. So as an economy as a whole in India, we can expect 7.5% or even 6.5% growth. So if that is the case, then we definitely would be doing about 18 to 20% growth for the full year.
And this growth you're mentioning is on the top line, or that's the bottom line?
Top line.
You're saying, okay, 18-20% top line. So this would be about 12%, 14% tonnage, and the remaining would be price growth.
Capacity utilization and all of that also. All the factors combined. It can't be just, two factors or one factor completely.
Okay. All right. Great. Thank you. Wish you all the best.
Thank you.
Thank you. The next question is on the line of Radha Agrawala from B&K Securities. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Thank you for the opportunity, sir. So my question was on the pricing scenario. I believe the pricing for the company is fixed on a per kilometer basis, and the rates are primarily dependent on diesel prices, wherein the basic price is fixed and changes are made basically according to the fuel price. So can you guide me how the pricing scenario works in a rising fuel cost scenario as well as in a declining fuel cost scenario?
Yeah. So basically, there is two aspects of that. One is to passing on this diesel increase to our customers, and another one to passing on to diesel hikes to our vendors. So vendors, we are paying as a per kilometer basis, and wherever diesel is increasing, we are passing on. And it all depends on what kind of hike is there, and sometimes it is also good. It is also a positive arbitrage for us, because we can be we have a lag on passing on to vendors. Second aspect of customer, we charging from them as a per kg, not a per kilometer basis. So per kg we are charging from them, and we have a diesel hike clause with each and every customer, and we are almost 90% cases in all the whatever past hikes has happened, we almost able to pass on to 90% customers on that case. Yeah.
Okay. So, the basic price is fixed, and there has been no change in the basic price for the last 3-4 years now. Am I correct?
No. So basic price, we have started to start to improve this price level also, and last 2 years we almost increased 4 to 5% on a basic price also.
Okay. So actually, so my question was regarding, let's say for FY22, like last year, our revenue growth was 28%, and our volume growth was also 28%. And on previous con calls, you had mentioned that you have taken a price hike of about 2.5 to 3%, something like that. And that price hike of 2.5% is not visible on the overall revenue growth if I just subtract revenue growth with volume growth. So is my understanding correct that the price hikes have been passed on, or price hikes were taken only for a few customers, let's say for SMEs, or can you please guide me how to understand these numbers?
Yeah. So basically, first thing, our volume was grown on last year, I think 27% in against of revenue growth of 28%. Second aspect, this price, this volume is basically because we are the pan-India company. So basically, our revenue is depending on which sector we have more cater. Like longest the distance, our per kg rate would be the highest one. And supposing shorter the distance, then our revenue per kg would be down, lower side. So this way, it is a combination of various factors. Which sector we have generated more revenue, which, what was the distance we have covered. So this way, it is also happening. So, whatever, so it is not exactly, it will be increased on the same manner.
Okay, so when we say that we take a price hike of 2 to 3% at least every year, so it means that we are talking about majority of our customers and majority of our routes. So on a blended basis, the numbers might be plus minus 1 or 2 percentage points.
Yes, because it all depends on which route, what kind of length we cover, which is a whole year we are doing the lakhs of kilometers we are running. So how much we have distance covered? Like supposing we, carry the cargo from Delhi to Guwahati is the highest per kg rate would be there. Supposing carry the cargo from Delhi to Lucknow, that is a different rate. So put together, so we are analyzing cargo is separately and, overall revenue separately. So last year we have done that way. So cargo has almost increased 27% and revenue grown on 28%, and we had taken a price hike of 2.5%.
Mm-hmm. So you mentioned that basic price also you have increased. So apart from the fuel price increase, I believe the basic price increase includes any kind of rise in inflation in other costs or any other costs. So does the basic price increase covers all the other inflationary charges?
Yeah, so basically inflationary pressure it will start only from this year only. Last year that we have not faced so much challenges on that. Yeah.
Okay, sir. So my next question was that if I see the revenue per branch for the company, so revenue per branch was in the range of I think 12.9 million for FY20, but for FY22 it is about 12 million. So as I can understand that per branch revenue is actually not on an increasing trajectory. So are we taking any steps to increase the per branch revenue for the company?
Yeah. Chandra sir, you would like to answer on that?
I don't know which quarters have been compared, but if you look at quarter to quarter, it is all on the increasing trend because each branch is a contributor to the top line and part of the bottom line also. So, you'll have to give more specific as to what data you're comparing.
So what I am comparing is on a yearly basis.
no
Is
worries.
it taking the revenue?
Yeah. So you, ma'am, you can give the separate data to us. So we will be reply on email which quarter and what numbers you are comparing with that.
Okay, sure. I'll do that. Yeah. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Nidhi Babaria from Envision Capital. Please go ahead.
Hi, sir. Thank you for taking my question. So, sir, what could be the reason for Q-on-Q decline in sales, like on a historical basis also?
So there's only one reason is there, because always Q4 is the highest revenue month because March everyone is clearing their stock, and then suddenly in April everything is come down heavily. So that pattern is going on, always. And always, May month is also slightly relaxed one, or, slightly slow growth month always. But then growth is started on a June onwards. Then because now is a pre-festival period, this Q2 is also growing well, because again, it is a pre-festival season started now. So that dispatches started in overall industry, and then revenue started to increase in robustly. So some month and some trends are there for slightly. Supposing there is one sector is it, there is a separate part. Like sometimes demand is lower in textile industry or so. That is a separate part. Otherwise, the normal pattern is that one.
Okay. And sir, would you be able to give rail and air segment breakup, how the revenue growth has been and what are the margins as of now?
So basically, we are not divulging the number. Once it will become a sizable, then we will start to, I think, in the separate number for the each services. But yes, rail is growing like 75% kind of growth rate on quarter-on-quarter basis, year-on-year basis. And air is normal, is growing on the what surface is growing in the normal pace. And profit margin is highest in rail and rail and air both. It's slightly higher than surface business.
Okay.
But the volumes are not as high as surface.
Okay. And what type of Q-on-Q growth are we targeting for this year? Because, like as you said, Q1 is normally a very weak quarter. So for our longer term targets and even for FY23 targets, what type of growth rate are you expecting for the next 3 quarters?
Yes. So we will be growing in the range of 16 to 20% in rest 3 quarters. And we obviously surely will be try to achieve the revenue what we have given the guidance.
So is this 16 to 20% would be on a Q-on-Q basis or a YOY basis?
YOY basis.
Okay. And sir, what type of price hikes have we taken for this year?
Chandra sir, you would like to answer?
So we are taking the price hike. The year has just started, and by year end, depending on inflation and all of that, it should be in the range of 3 to 4%.
Okay. And sir, any color on freight rates for the rest of the year? Like by what percent are we? Is the industry expected to grow its freight rates on an average basis?
So we run on a vendor management system, so I'm not sure about the market freight rate. But if you look at the overall demand versus supply, the demand also is depending on the economic activity of the country. So if the economy is strong, then the demand will be strong also. So freight rates could move up. But we are not in that on the spot hiring system, so it doesn't really affect us.
Okay. Thank you, sir. Thank you for taking my question.
Thank you. The next question is from the line of Kunal Bhatia from Dalal & Broacha Stock Broking Limited. Please go ahead.
Thank you for the opportunity, sir. Sir, you did mention about the utilization currently was at 84.5%. I can see that last year it was actually lower at 83.5. Am I right on that? Hello?
Sorry, you're talking about Q1 of last year?
Yes, sir. Yes, sir.
What you're mentioning is 83.5?
Yeah, right.
No. That was high actually. That time, because that time was the corona was there. So, in generally, we can be some advantage of to be delay some consignment, because that time load was not proper because revenue was less. But this time, because now it is a full revenue month, so we can't be compromised on service level. So we have to be, send the truck. So utilization level is 84.5% is just like in a temporary one. In this quarter, it will be certainly in the range of 85.5% kind of.
Okay. So, no, sir, I was just looking for a comparative number. Last year, how much was it?
Sorry?
Last year, same time, how much was the utilization, sir?
It was 85% plus.
85% plus. Okay. And, sir, my second question is in terms of the Gurgaon facility. We have mentioned that we have reached approximately 18% of our revenue was from the Gurgaon facility. So, how much that can be scaled up to? Because I believe that will give you addition on the margins.
Yeah. So again, it all depends on what kind of revenue we will generate from this sector actually. So yes, it may be like it is scalable. Even up to 40% we can scale up in Gurgaon sorting center. That capacity we have.
Okay.
Yeah. So time to time, if you see over the period, we will be increase that numbers of this tonnage carrying through this center, and subsequently it will be also, yes, it will be positive for our margin level.
Okay. So this 40% kind of overall volumes from the Gurgaon facility will take how much time to reach there?
I think it's not, it's take, I think 5 years.
Oh, okay. So it will be a very gradual process, you mean to say?
Yes. It is not the overnight process. It will take time.
Okay. And so this new capex which you have mentioned about, wherein you have spent about 33 odd crores, could you just give some sense on how big is that facility, or what you intend to do from there? So a little bit on the asset turn, what kind of revenue you are expecting from this?
So basically, it is we have bought a land in Kolkata, and that facility will be also like in the range of 2 lakh square feet. We will be built up there.
Okay.
So we are in a process to file the application for taken a permission for construction and layout approval. So it will be all processes slightly gradually it will be happen. But facility will be like 2 lakh square feet. It will be also automated one, which we have done in Gurgaon. Okay. So now whatever facility will be add as a greenfield, we will be making them as a automated one.
Okay.
Yeah.
And so what will be the utilization level for the Pune facility currently?
So Pune facility, again, if you see, now it is manual one. It is the facility which earlier we had is only 1/3 kind of facility we have there. Now is a 1.5 lakh square feet. So you can see, it is like 40% is right now we are using that facility.
Okay. Yeah. Because that we started in FY21, so we are at 40% in 1 year's time, if I'm not wrong.
Yes, so it will be gradually grow because it will be increased utilization with the increase in the business over the period.
Okay. And so just a rough calculation, you mentioned about a 20% growth for the entire year. So that gives us about for the next 3 quarters, you will have to grow at around 18%. So is that a reasonable number to work with? And we can get back to those 16-17% EBITDA margins for the next 9 months?
Yeah, so again, if you see, last year we have also said the same thing. We will be, our endeavor to increase the margin of 50 to 100 basis points in each year.
Right.
Which we have done in the last 7, 8 years, we have done that. And in this year also, we will be certainly increase our margin level. So we have reached on a 17% in last year. This year we will be targeting to 18%, and certainly we will do that.
Oh, okay. And would you be able, just the last question from my side, would you be able to share how much was the contribution from the new businesses, the C2C Express, cold chain, and the railway?
So if you put together, then it is almost 6 to 7%, and including air, this is combination of all services, which is other than surface. We have a 15% share right now.
Okay, including air would be 15%.
Yeah.
Okay, sir. Fine. Thank you so much, and all the best. Thank you, sir.
Thank you. The next question is from the line of Alok Devra from Motilal Oswal. Please go ahead.
Hi, sir. Good evening. So, sir, just wanted to understand very similar to or follow-up to the previous question only. So, sir, first quarter, after seeing the numbers, and we are talking about a 20% growth. So that means around 17-18% growth and the 330-340 crore sort of a quarterly run rate. So, just wanted to understand, I mean, how confident are we on achieving that? Because, so from a festive quarter standpoint, we can still understand that one quarter we can have that kind of number, but is it sustainable for all the 3 quarters on an average basis?
Yeah, Chandra sir, you would like to answer?
So what we have done is that, what I understand is also that the business here is in streamline to have that sort of a growth. The economy is also now revved up to have that sort of a growth. And there is some, again, God forbid, any problem of, like a sudden war or new issue or something, then overall the entire economy can get affected. And if that happens, our business will get affected. But as of now, I do not see any challenge happening because the country is also poised to grow. The economy is poised to grow. And our number one rider for company growth is the strength of the economy. So that will come for sure.
Sure. And how has this July been for us? I mean, how has the momentum been in July? Because, we heard of some slowdown in selected pockets.
No, we have not seen that happen in our business. Yeah.
Okay.
But I definitely, what I hear also is that that automobile, which we are not in the business, that might be slowing down from next month or something. I don't know.
Sure. And also, sir, so I might have missed this answer you might have given previously, but these margins which are now at around 14.7% or so, so how fast we are looking to get it back towards the 16%, 17% kind of range, which we have.
So this will happen from Q2 only, and this was something which in Q1 we have all the salary increase increments, we have all the additions of planning done, and so all those things usually in the month of April and May they add up for the year, and so that is typically the sense in logistics also. And logistics volume also come down, because consumption comes down in the first quarter. Schools finish, people go on holidays and all that. So that part of the economy you'll see, travel, hotels and all that doing pretty well. But here consumption and all that is reduced. So now normal Q2 onwards it always starts normalizing, and we're seeing that at least in our business.
Sure. Just one last question. So, has there been a case where we had higher diesel prices, but we are yet to pass on, or we have just maybe passed on that increase to customers in July?
I can give you a very good example. Last year, when in the month of Diwali month or before that, immediately the price was increased, diesel was increased, and we were unable to pass it on immediately.
Yeah.
So, if something like this happens, then it is beyond our control. Otherwise, things are under control. And I don't see any challenge in not being able to increase the price. And of course, the fact is that when we are doing something which is rather not different, we are not trying to garner top line because of the cost of bottom line. That's where we really see the upside happening, because we are not compromising on quality of the service. Customer will only give us the price increase if there is quality of service. Otherwise, he will say, you reduce your price. First thing he will say. So, in keeping that in mind and keeping all those factors in mind, we are able to increase the price along with the levels of our service, which we maintained and intact. And actually improving now with this new sorting center that we have automated.
Sure. No, actually, this question just came up because the gross margins were down. So just wondering whether there's some price increase which we are yet to take linked to the.
See, our business, what you see down is all temporary. It's
Right.
not like, because again, if it's down, it means the economy is down. Look at it this way. And if the economy is up, you'll see that everything is up also. That's typically the case. We are not a new age company where, we will just, burn P money and do anything and everything. We are a conscious business. So that in keeping that in mind, we are able to, sustain it going forward. And we don't show any abnormal profits or abnormal revenue growth or anything of that sort. So keeping that, intact, we are able to sail through any of the challenges.
Got it. Yeah, I think that's all from my side, and all the best, sir. Thank you so much for taking my questions.
Thank you. The next question is from the line of Preet from Wealth Advisor. Please go ahead.
Yeah, just a follow-up question. Are we seeing any increased competitive intensity? Say, for example, Gati is coming back, or other players like Mahindra Logistics and others are getting into express. So are we seeing?
I don't think Mahindra is getting into logistics. They don't have the network or infrastructure.
Okay.
Gati is only, if you see that what they do are, they are masters of jugglery. So what business they have put where to add or to increase top line, they only know, because they are able to now. There are talks of their parent company or whatever adding their logistics business to Gati, which means that their profits, the margins will take a bigger hit now. So it's just if you look at clean cut express business, we are the only company that is there, that is transparent and visible in terms of what the numbers are showing. So I don't think that competition has eaten into any of our share or has the strength to do that, because they can only do that by reducing their prices. And that's also a temporary phenomena, because if the service fails, the customers also come back to us.
So, Chandra, the follow-up thing is that we are seeing a lot of slowdown in the PE money as well, right? And if that continues, some of the PE players will not get the kind of funding they used to get to burn money. Are you seeing any of that sort of changes now on the ground, where they are not offering ridiculous prices?
I don't see anything of that happening anywhere in the field. It's kind of very hard to gauge what is what they are thinking, what they are doing. If their money is drying up, then they will probably. The problem with these companies is that there is no owner, and there is no one. If there is no owner, it means that there is no skin in the game, and if there is no skin in the game, they don't care. So it will only be beneficial for a handful of investors. That's all. So for them, sure. I mean, that's the way they get the returns. They're happy, but then that's short term.
Okay.
Thank you. We'll move on to the next question. That is on the line of Nidhi Babria from Envision Capital. Please go ahead.
Yeah, I'm done with my question. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in one. The next question is from the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good afternoon, sir. I just wanted your take on your, going for sorting centers through purchase of land and everything rather than, leasing those facilities. So, if you can talk a little bit about, having your own sorting centers versus a leased one, or, might be having a kind of combination of both of owned and leased, what kind of model you want to operate it. And during this upcoming festive season, are you going to put up more lease facilities because own sorting centers would be taking a little bit of time. Yeah.
I will clarify with you two things. Number one, all major locations, you need to have your own sorting center, because if you cannot have any sort of operational, situation where it is shut down because of landlord or whatever reason it might be. Number two, those companies which don't have any of their own profitability, they go into lease model. We don't go into lease model of the large centers. We go of the smaller locations. So that is where the difference lies. That is why we are able to build this 2 lakh facility, 2 lakh square feet facility, and then able to, generate efficiencies unheard of. So that, of course, takes time for the shareholders to see, and eventually they will see it. I mean, it's something which is visible. So to make it happen, some centers you need to own them, and it's a 80-20 principle. 20% of the sorting centers you have to own, and 80% you have to, or rather the other way around. 80% you have to own, and 20% you can lease in smaller locations.
Right, sir. And with like festive season periods, during that point of time, do we have kind of capacity, or we have to go with leasing of some facilities, or we don't those capacity?
Usually we don't have any issue. Maybe in small locations there could have been previously, but not now.
Okay. And one last question would be, is it better to have such large facility in a particular area, say Gurgaon, or rather we should have 2-3 facilities nearby? Because sometimes what happens, that particular facility gets affected. Like we have seen farmer agitations or those kind of things. So that gets a big toll on the company. But still, yes. What would you prefer, that a large facility in a particular region, or a distancing 2-3 kind of facilities?
That's a very good question, and I think looking at we have to understand that the fuel cost and labor costs are very high in India. Therefore, having multiple facilities, it loses the focus of having an asset light or even just a efficient system. So a large facility is beneficial when it is automated. Now, when we have a situation, as you said, like farmers' agitation or something like that, we did find the operations did not stop. It was just the route network that was changed. Everything else was running in perfect sync. Also, what happens is that when you are having multiple facilities, then you are compromising on the most important thing, which is service. In service industry, we need to have very high service standards. So imagine if you are taking a flight Delhi to Bombay, and your flight is stopping in Jaipur, it is stopping in Ahmedabad, and then reaching Bombay, it is taking 12 hours versus direct flight of 2 hours. So obviously you will be happier with 2 hours, and you'll be ready to pay a higher price. So that's how it works. That's how the benefit comes in.
Thank you very much, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, we'll be taking the last question. That is on the line of Radha Agarwala from B&K Securities. Please go ahead.
Thank you for the opportunity again, sir. Just one question. So from the annual report, I noticed that the number of air gateways that we had in FY21 was 51, and in FY22 this has increased to 73. So as the industry is moving from air to road and rail, etc. So so with respect to that, what is our strategy on the air express segment?
It was increased because we started sending directly the booking of the consignment from that location itself. For example, if all the airports which were not which were smaller in size and the flights were not touching there, we were able to send the material by road to a larger location, and then it was sent by flight. Now the smaller locations have opened up, and the bigger airports are opened up, so we are able to ship out the air shipments. Air cargo in India is not growing at all. It is just running on the backbone of few companies which have freighters and the airlines which are the belly space. Once the airline belly space comes back to in full capacity, we will see that the air cargo prices will drop considerably. They're already very low, and they will get lower even when that happens, when the capacity increases. In India, customers are not inclined to pay very high price. So whatever is happening in air cargo industry, it is just a mix and match of different services put together and shown as Air Express. In our case, we do purely Air Express if the customer wants next day delivery, and that percentage is very less.
Okay, thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Chandar Agarwal for his closing comments.
I must thank you all for joining us here today, and we look forward to meeting you in the next quarter. Please stay healthy and feel free to reach us if any questions remain unanswered. And I also invite you to please visit our automated sorting center. With that, thank you very much, and have a pleasant evening.
Thank you. Ladies and gentlemen, with that, we conclude today's conference. We thank you for joining us, and you may now disconnect your lines. Thank you.